All right, guys, you're welcome to my class. And at More Tax Academy, we strive to make our lecture notes available. And so today I'm going to take you through tax audit, and I believe that it's going to assist your reading on tax audit, paper 7 of the CIT exams. So if you want to join us, we meet on Saturdays from morning 8 a.m. to afternoon 3 p.m. We meet and have fruitful discussions. Well, our pass rate is so high, such that if you come, not only do we prepare you for exams, but we also prepare you in your profession as a chartered tax practitioner. So, this at this moment, I want to take you through a brief introduction to the paper tax audit. And as you can see, the paper comprises about three elements: tax, audit, and investigation. Each element we expect you to demonstrate some learning. So, tax, we expect that you know most of the tax laws and how to apply them. Audit, we expect that you apply what you know already, auditing principles, audit principles, and then sometimes during the audit, you encounter some events which appear to be, which seems to involve some criminal um, elements. So, under that circumstance, we expect that you should be able to apply investigative investigative skills to the audit. So, what does the paper require? What does paper 7 require from you? We expect that you apply your or you develop your analytical skills, which you will need as a chartered tax practitioner. And so, the main objective of this paper is to ensure that you apply your auditing and investigation principles to this paper. You don't leave it out. So I have summarized what a tax audit is as an introduction to this lecture. So we can define or describe tax audit as an examination of a taxpayer's returns and records. Now, let me explain here that tax audit is not exactly the same coverage as the normal audit. Why am I saying so? Tax audit, whereas the normal audit, the auditor is appointed by, let's say, the shareholders, and the auditor is responsible to the shareholders by expressing an opinion. Okay, expressing opinion at the end of the audit, whether the account shows a true and fair view, true and fair view. So you see, most of the audit, that is how it is. It's supposed to show true and fair view. Tax audit is not like that. So first, the person who conducts the audit may not necessarily be or may not be the auditor appointed by the shareholders. In this case, the audit is conducted by the tax authorities. And here, if I say the tax authorities, I'm referring to the GRA, General Revenue Authority. Or if the GRA is not unable to do it, they will appoint their agents. Sometimes they will appoint some of these audit firms to do the audit on their behalf. Now, the end result is not to express opinion as we have in the normal audit, but the purpose is to verify or cross-check whether the income and deductions filed by the taxpayer is accurate. Now you remember that the basis of taxation in Ghana is that the person must have a chargeable income. Chargeable income, then you'll be subject to tax. Now, Section 3 of 896 says that the assessable income of a person is the person's income from employment, from business, and from investment. These are the three main sources of income which we subject to tax. In other words, we assess you for these three main sources of income. Now, chargeable income is defined in Section 2 as the assessable income, which we just mentioned in Section 3, minus allowable deductions. So in other words, this assessable income is the income which we are talking about here. We are saying that your income, we want to verify whether the income is correct, and this deduction is all the deductions that are allowed under the law. So the purpose of the audit is to verify whether the income which the taxpayer is supposed to include in the returns and the deduction that he's supposed to take out are correct. The reason is that if they are incorrect, you know that the tax liability depends on the taxable income or the chargeable income. Let me call it the chargeable income. Now, if the chargeable income is equal to the income or the assessable income minus deductions, if the income is not correct, the tax revenue will be at risk. In other words, the tax revenue will be smaller or low. So you want to ensure as far as possible the income is correct and has been included and accounted for properly. Now you also want to ensure that the deductions, the expenses that the taxpayer is going to take from the income is also correct, so that the correct chargeable income is reported. So that is the first reason why, or the first main objective of tax audit. The second is to ensure that the tax laws have been applied correctly. Now, if the tax laws are not applied correctly, again, tax revenue will suffer. So, in the end, ensure that the income and expenses or deductions are accurate and the tax laws are applied correctly. The overall purpose is not to express an opinion as whether the returns are correct or not, but the overall purpose is that all taxes due the state or all taxes due Ghana, the government is accounted for and paid for. Correct. So we expect that in this in your learning, you bring on board your skills of taxation. You should remember all your accounting principles, because in most cases the examiner will give you sometimes simple accounting records like maybe um, control accounts for you to test to test whether the accounting records has been kept or has been prepared correctly. In fact, taxation cannot exist without the accounting principles. And so section 19 of section 19 of 896 says that the inclusion and accounting of the inclusion and timing of all items for tax purposes should be done in accordance with generally accepted accounting principles, or what we call the International Financial Reporting standards. So, accounting wise, you should have some basic knowledge in accounting. Now, for audits, like I've already said, you must remember all your auditing principles, everything that you have learned in audit, you have to. That does not mean that if you have not done accounting before or you have not done auditing before, you cannot do it. What is required is that there will be some element of accounting and auditing in this paper. Now, like I said, sometimes if you are auditing and you encounter some activities, crime, criminal activities, criminal activities, or events. Now, the audit changes from normal audit to investigation. Okay. investigation. We'll come and look at it. Investigation, here you may be gathering evidence for prosecution in courts. Now, let's look at the legal provisions for an audit. If you read section 36 of the Revenue Administration Act 2016, Act 915, the commissioner is empowered, and so let's read it and say it says the Commissioner General may, in the exercise of powers under this act, including section 33 and 35, audit the tax affairs of a person. See, so here the Commissioner General has been given the power to audit the affairs of a taxpayer. Now, what are the selection criteria? Subsection 2 says that the Commissioner General may select a person for an audit having regard to three main selection criteria. The first one is that the history of the person regarding compliance or non-compliance. So if you are a taxpayer and you are found to be non-compliance, the GRA can classify you that you are a high-risk taxpayer. And so such taxpayer, you need to be monitored, you need to be audited to ensure that all taxes due the state have been paid for. Sometimes if you are highly compliant tax person, you are less likely to be audited. That does not mean that you don't get audited, but non-compliant taxpayers are always classified as tax taxpayers. Now, apart from the history of the person, the GRA can also consider the amount of tax that you are supposed to pay or the amount of tax payable. So normally, large taxpayers are also point of audit, point of select feature for which the GRA can consider in selecting you for an audit. The next one is the class of business in which you are. So maybe the GRA can say that they want to select communication service telecom companies and they want to audit them for CST, which is the communication service tax. Or maybe they want to select banks and then it says, okay, we're going to audit banks for A, B, or C. So these are the criteria for selecting. Or sometimes D says that the criteria developed under a compliance management plan. Now the GRA has a compliance management plan in place where based on that they can randomly select any tax returns for audit or any other matter that the Commissioner General may consider appropriate in selecting a taxpayer. Good. Now, sometimes you see that the GRA will audit you and then they will come for another audit. And they will want to audit the same period again. Now, subsection 3 provides that a person who has been audited may be re-audited. But then it should be based on reasonable grounds. Okay, so if the Commissioner General is saying that for 2014 to 2018, you've been audited already, they can call for an audit for the same period based on some evidence or additional grounds that the Commissioner General will have. So, if you have an audit, which is if you have a period which has been audited, and they are coming again, I suspect that this is where they are getting the GRA is getting its powers from. But the only issue is that sometimes we see what we call concurrent audit. So one audit is going on, and then another office of the GRA will also write to you and say that they're coming for an audit. Well, you can discuss with them and probably merge the audits, but the law is saying that if you have been audited, in fact you should have been audited already, and probably the audit closed, and then the GRA can now audit you. But whilst the audit is ongoing and another team trying to audit, I really don't know where that practice is coming from. But hey, I have discussion with your GRA officers, and then agree on the best way out. But then before they come for audit, subsection 4 says that you should be given advance written notice. Okay, should be given advance written notice that you are going to be audited. And sometimes when they are auditing you, subsection 5 says that they can audit you for more than one tax purpose. So for VAT, CIT, which is corporate income tax, they can audit you for VAT, they can audit you for whichever, CST, they can audit you for excise duty, they can audit you for PAYE, or alternatively, only PAYE will be chosen, and then that audit will take place. So whichever way it is, the GRA has the power to audit you. Now let's look at records keeping. Section 27 is very, very important, and section 27 of 915 as the Revenue Administration Act. Taxpayers are supposed to keep records because the records and the returns are the main sources. The main basis for the GRA to conduct an audit. Without the records, without the books and accounts, the GRA can barely do any meaningful assessment which is based on actual transactions that has taken place. In fact, the Companies Act also makes it mandatory that all companies are supposed to keep records. And it seems that this records keeping was examined in the February August rather, should be August 2019 exams. August 2019 exams. Yeah. Was an element of a portion of this section 27 was tested. So section 27 says that a person shall maintain within the country necessary records to provide information in respect of documents to be filed with the Commissioner General under a tax law. So here you are supposed to keep and maintain within Ghana the necessary records. See it. And the records are to enable the Commissioner General determine the tax payable under the tax law. You may file your tax returns, but then the records must be available for it to be verified to ensure that the taxes due the state has been properly accounted for. And then C says that may be prescribed by regulations or by Commissioner General. So the Commissioner General or by regulations can prescribe the type of records or the type of information that should be kept for purposes for his verification. And subsection 2 tries to define or give examples of some of the necessary records. It says that the necessary for the purpose of subsection 1, necessary records includes documents, whichever way you want to describe it, like receipts, invoices, vouchers, contracts, whichever, whether in electronic form or any medium, whichever way you want to describe the type of document. It gives examples of such document. Now, sometimes we have the issue of when can we keep documents, up to how many years can we keep documents, the one we call the retention period. How long can I keep my document or the retention policy? Subsection 3 says the document referred to in subsection 1 shall be retained for a period of at least 6 years from the relevant date, from the period whichever is longer. So, or the period whichever is longer. Now, the minimum period is 6 years, or for the following period, whichever is longer. There are some special circumstances which will require that you keep the document, and so whether it is more than 6 years, we will now go by those special circumstances. A is where a person objects to a tax decision or appeals against a tax decision. A document relevant to the matter in dispute shall be retained until the matter is decided and the decision executed. Now we'll come and learn dispute resolution. Sometimes when the GRA makes a decision or they raise an assessment on you and you are not comfortable or you don't agree, you can appeal. Now if you appeal, you can appeal up to even the Supreme Court. Okay, and appeal up to the Supreme Court. Now you know matters of court can sometimes take longer. So if you appeal a decision of the GRA and the decision takes more than 6 years, now you cannot go back and tell the GRA that look, the retention period is 6 years, so you are going to discuss it. No. So A is saying that where it relates to a decision which is in dispute, you must keep those documents, even if it is 10 years, you must keep them until the decision has been settled or decided on. For example, if it's at the Supreme Court and the Supreme Court takes like 10 years to decide your case, then in that case, you should keep those documents until the Supreme Court renders its judgment. B says that where a person makes an application to the Commissioner General, a document relevant to the application shall be retained until the application is determined. So sometimes you write something to the GRA and you need some determination or you want some ruling, and it takes them more than 6 years. Then in that case, you should keep the documents until that decision or that determination is made for you. C says where a person seeks a refund of tax, the document relevant to the calculation of the refund shall be retained until the refund is made. Now, under our tax law, if you overpay, there are procedures to go through for the refund. If the refund is taking you forever and 6 years has elapsed, you don't revert to the 6 years. However, you keep it until the refund is made. And this is where a person has received notice of investigation by the Commissioner General. A document relevant to the investigation shall be retained until the Commissioner General notifies the person in writing and the investigation is completed. Good. So again, we are saying that if you are under investigation and the investigation has not been completed, you cannot discard that document. You just have to keep it until the investigation is complete. Okay, I'm not going to read this one, I'll jump it. But mostly in audit, um, try to know the penalties because, like we said in the opening statement, the object is to ensure that the tax law have been applied correctly. So if the tax law is not applied correctly, and when there are sanctions or penalties, then you have to apply the penalties. So in our next lecture, we'll be discussing penalties for failing to, for example, failing to maintain records. In fact, we'll be discussing the entire penalty regime in Ghana. So join us in our class and become a chartered tax practitioner. Thank you for joining me and hope to see you shortly.